Hello and welcome to the How to Exit podcast. Today I'm here with John Andrews.
Yeah, well, it's not been a traditional path actually, Ron. Born and bred in Surrey, um, did my law degree at the London School of Economics. Didn't have a clue what I wanted to do. I was half thinking about going into the police force, and then went to the dark side, as most of my police officer friends would say. Started life out as a litigation attorney, as you would say in the States. Decided that that was a young man's game when I got to my mid-30s, and then retrained to become a corporate and commercial lawyer in my mid-30s, and I've been doing that for the last 20 years.
What are the things people should look out for when, you know, when we're looking at buying companies, in UK and London? Is there anything that's like really unique we got to be aware of?
I think the key difference between buying in the UK and the States, in my experience, is the buyer's appetite for risk. Actually, what you will find when I've acted for American buyers is that very often when you're drafting the purchase agreement, you will have warranties, so promises about the business contained in that purchase agreement. And I think in the States, it's quite common, if not usual, for those warranties to be termed in the form of being indemnities.
There's a national database where the financials are kept. Does that help with the due diligence? I didn't want to name it because I'll butcher what it's called. And
A national database of businesses to acquire, or information about the businesses.
And if the information about the business, the financials, there's a national database where
Yeah,
all public businesses have to report their financials to.
yeah, absolutely. So essentially, all limited companies and limited liability partnerships have to file annual accounts. They're filed at Companies House. There's a formal record kept there of who the directors of the business are, who their accountants are, where their registered office is, and they have to file accounts every year. Part of the acquisition process that we're looking for, quite apart from the filed accounts, we also want to see the management accounts on a month-to-month basis to see what's happening. And I think what I find when I'm acting for buyers or sellers here, particularly for those smaller businesses, owner-managed businesses in particular. The biggest risk in the UK with buying the shares in a limited company, you say you're buying its history. You're taking it on as a going concern. The downside of that is there might be undisclosed litigation or complaints. Also, tax revenue issues are often cause problems when you buy companies.
Is there an insurance product that actually would protect you against something like that?
Generally speaking, no. And if you can get it insured, it's hugely expensive. What you tend to do is do quite a lot of, on asset purchases, is do quite a lot of detailed due diligence. And if you have any concerns, you either ensure that you have a decent element of deferred consideration, so you hold back part of the purchase price, for a period of time, or pay it over a period of times, or you have a specific retention which you hold in a bank account, which we call an escrow account, for a period of time to make sure that any potential claims don't materialize.
What would you say is the biggest thing that kills the deal from the seller side? A seller's trying to sell his business. You guys are helping them, get the paperwork done. What's the biggest thing that can prop up that would,
Yeah,
stop that process, the forward progress on that?
I think the big issues are, as I say, first of all, not being honest in your accounts or in the financial information that you provide at the outset. Secondly, having unrealistic expectations as to what the multiple is that you can achieve for your business in your particular sector. And as you probably know, Rod, if you've done a few acquisitions, different sectors have different multiples. So some might be 3 times, some might be 5, some might be 7. But generally speaking, buyers are not unreasonable in terms of multiples, but they know what multiples apply in particular sectors. And it's those smaller businesses where I think that buyers and sellers have to be a little bit more creative about how they structure their deals and how the price is paid.
What ticks the seller off where they just won't do business with the buyer? having done this as long as you have, I'm sure you've seen that a lot.
Yeah, I could. Well, I can tell them the most common thing is where you've got, say, an inexperienced buyer or a new buyer, no track record. They want to buy the business on deferred payment terms, so don't want to pay too much down, but they also don't want to give any personal guarantees or assurances that the seller's going to get their price. That's the biggest issue. Lots of deals are being done where the buyers are putting none of their own money in. They're using cash in the business to pay the upfront payment, and then the balance is deferred over a period of time. So the business self-funds the purchase, if that makes sense. Now, that works well, but what you've got is a seller saying, well, if I'm not going to get the rest of my money for another 2 years or 3 years, what if things go wrong in that period of time? I want an assurance that I'm going to get that. And the best assurance you can have is a personal guarantee from the buyer.
What would be the best resources if somebody was looking to buy a business in the UK? I know here we have some websites up and some stuff like that. Can somebody actually search that database of businesses out there?
You can. There's a number of different databases that you can search to find out details of businesses in the sector. Actually, finding out details of businesses for sales is a lot more difficult. Generally speaking,
Right.
it's the brokers who have those, and you need to go to the brokers' websites.
There's a lot of stuff that exists on the commercial space that doesn't exist in that residential buying a home space. What are your
Yeah,
concerns? Go ahead.
I'd agree with that. I think in the UK, in terms of actually putting a price forwards, I think that's pretty rare. What these letters really are just a feeler to see whether there's somebody who wants to sell. I think the danger of looking at accounts at Companies House, for example, as I mentioned to you, is that you make an offer and that might be wildly over the top, and suddenly you then meet the guys in person, you get hold of some management information, management accounts, you think, well, do you know what, that bears no relation to the figures that have been filed.
Getting them in trouble, and they do it here on the residential side. They jump on to whatever databases are out there, they run their numbers, and they just start submitting offers all over the place, and they only negotiate on contracts that come back. And I was like, if you did that in this commercial space, you could get nailed for failure to perform. I've seen people get sued over on commercial real estate
Yeah.
because they agreed to a contract, and then the other guy signed it, and then they found something they wanted to negotiate down, and you've already signed a contract. It's a different game.
It's an interesting point, actually, because I guess if you send out a letter saying that I've seen your business, I want to buy it, and this is what I'll offer for it, and somebody fires back a letter saying, yes, deal done, you could be in trouble.
you know uh you know I don't think it'll get that bad. It's like one of the reasons I jumped out of the real estate space is I don't remember, I'm going to butcher who actually made the quote, but there was a quote about the stock market. Is about when a shoe side boy starts giving you advice on stocks, you probably shouldn't be in the stock market, right? In the United States, the real estate space was getting that way.
Yeah,
I had people just like barely that just graduated high school calling me trying to wholesale me houses, and he's got 15 houses under contract, and none of them
yeah,
are priced right? And he's not going to be able to sell any of them. Basically, whatever the seller said they wanted, he said yes, and then he tried to sell those contracts, to investors like myself.
yeah,
And I just knew by looking at that eventually it's going to turn bad.
yeah,
And just last November, they passed a law here in this state that says you have to have a real estate license to actually wholesale contracts like that, right? So that's what happens, and the same thing's going to happen in this commercial or business acquisition space. You get a
yeah.
bunch of new guys in here that don't know what they're doing, and they start harming business owners. What would you suggest their process be? Like if they were going to go buy a business, go ahead.
Yeah, I think the first part of it is ideally buy a business in a sector that you know something about. I think that I've got people at the moment who are looking to acquire businesses, for example, in the care home sector, residential care. Now that's highly regulated, highly specialised. So if you haven't got experience in that area, unless you're looking to buy a business that's got an established and maintainable management team in place already, it's not the kind of sector you should be looking at.